From our studios in Scottsdale, Arizona, welcome to Retirement News Online. When it comes to financial planning and investment decisions, there are two key concepts that are often used interchangeably but have distinctly different meanings: risk tolerance and risk capacity. Now, while tolerance refers to an individual's psychological willingness to take on risk, the risk capacity relates more to the financial ability to endure potential losses. Now, joining us is Benny Stewart with Summit Pointe Financial in Lee's Summit, Missouri. And Benny, thanks for talking with us today. I assume with our temperature today here in Scottsdale at about 100 degrees, it's a little bit cooler in Lee's Summit?
Yeah, it was about 20 when I left this morning, so slight difference.
What do you think of Scottsdale so far?
It's beautiful.
Yeah? Okay. Well, thanks for coming.
Yeah, thank you for having me.
So the difference between risk tolerance and risk capacity, I kind of talked a little bit about that in the beginning. How much risk, how do you tell how much risk somebody can afford to take?
The situation's kind of the boss. It depends what the client, what life stage they're in, how much money they have, what kind of liquidity they have. All those kind of things factor in.
When you talk to somebody for the first time and they come to the office, have a conversation, I would assume this is correct. A lot of times they really haven't really thought about risk tolerance or capacity since they started investing. And so as they get closer to, for example, retirement, we start to have to start thinking otherwise, right, and start to protect a little bit. How do you deal with that situation?
Well, you're right. Most people don't think of it as two separate things. Your risk tolerance is the emotional side of things, and how much you think you're willing to take, and your capacity is what you're capable of taking without ruining your goals, right? So we have to try to align that for clients, bring them back into focus on where it actually sits.
And then you talked about time horizon, income needs, guaranteed income sources. One of the things that is often overlooked by consumers, advisors understand this, but a sequence of returns risk, where you can have two people with the same kind of investments, the same assets, the same returns over time, but depending on what the market is doing when they start taking income, you can have some potential serious problems. How do you deal with that?
Well, again, we try to take the emotions out of things for clients, right? Try to help them understand that there are ups and downs in the markets, and we have to tolerate those. But we do have to set up plans specifically for clients. You can't just be cookie cutter with how you build a portfolio. Having things in there like fixed annuities for income side of things, or stocks for the growth side of things. It's all about having the correct balance for each individual.
But the plan is important, as I think a lot of people don't really have a plan. They kind of think they do, but it's just sort of big worthless statements. So at the time of this conversation, there's a lot of geopolitical conflict going on. The market has not been performing the way it has been recently. We just talked about emotion. What are you telling your clients right now?
That these things have happened before. This isn't the first time. There's a letter out there from, it's like 1981, that goes on this whole spiel of, political unrest, Middle East, oil crisis, and you would think it was written yesterday. And in fact, it was back in 1981 that this letter was written to investor clients. So it's nothing new. It's troubling. It's more noise than anything else, and we'll get through it. It's just a matter of sticking to the plan that we've created for you.
What do you think? You sometimes feel like a therapist, don't you, as well as a financial advisor?
Oh, yeah. There's a lot of talking off the ledge when it comes to client meetings, but in general, that's what we're here for.
And I guess the final question, too, with what we've been talking about here, what's the one thing you wish people understood more about what you do?
I wish they understood more that I am aligned with them. I want to help them achieve their goals. I think you see a lot of the older movies out there where it's the stockbroker and people trying to take you rather than help you, and that's not what we do. We're a full-service financial firm that we're trying to help clients achieve their goals in retirement.
The accumulation side and the distribution side.
Correct.
Which sometimes the distribution side is forgotten. Well, Benny, it's been a pleasure. Thanks for joining us here today in sunny Scottsdale. That's Benny Stewart with Summit Pointe Financial in Lee's Summit, Missouri. This is Retirement News Online. Check us out at retirementnewsonline.com. Thank you for watching.